Test, test, 1, 2, 1, 2. Can you guys hear me and see me okay? All right. Today is the day. What's going on, guys? Fed rate decision in the next 4 minutes. Let's see how the market reacts. We doing good? Feeling good? Let me get the people on Instagram over here. If you guys don't follow me on Instagram, it's going to be linked down in the description. All right, let's see it. Here we go. You guys hear me and see me okay? All right. I'm going to grab myself a drink real quick. I'm eating some Chipotle. And I'm going to get myself a protein shake. 1 second. All right, we are good to go. Hello from India. What's going on? Nvidia about to moon or crash. Can't be too certain in this market, right? All right. One thing that I'd love to remind people is please do not carry an open position if you cannot tolerate the movement that the market is about to have, both good and bad. Again, we do not know if the market's going to react in a positive or negative way. So again, keep it simple. Don't carry an open position if you can't tolerate the movement that's about to present itself. That simple. Well, Ricky, what if it goes up? But what if it doesn't, right? If you're willing to accept the risk that it comes with, you know, you earn it, right? So you earn the green day or you earn the red day, whatever ends up happening. 30 minutes after the rate decision, so in 1 minute, the rate decision is about to be released. Markets will react. 1 minute after, 30 minutes after that, Jerome Powell's going to speak and go live and answer questions. I'll leave it up to you guys. If you guys get this video to over 500 likes, I'll stay live for the remaining 30 minutes. And then 30 minutes after that, because it doesn't start until 2:30 p.m. Eastern Standard Time. So 30 minutes from now is when he's going to start going live. So here we go. Any second now, the market's going to react. Let's see what presents itself. I believe that they're going to be pausing, right? So no surprise there. Here it goes. Market reacting in a negative way. NASDAQ market pulling on back. Let's see if the selling pressure continues. Looks like it's holding. Let's see if we make new lows. I would love to see more selling pressure. Look at that. Here we go. Still selling off. More selling pressure. More selling pressure. MSTR dropping as well. MSTR testing oversold levels. MSTR hasn't been doing anything crazy today. Unless the market fully breaks its pattern, then maybe it will. But MSTR has had a common support of 333 and a common resistance of 340. Respect the trend. I have not traded MSTR today. And I want to remind you, just because the market is doing something before he begins to speak doesn't mean that it has to continue when he begins to speak. There are many times that the market can completely shift directions by the time he begins to answer analyst questions. Do not short MSTR. Now you just want to make me short it. Okay. Nice. I like that. I'm going to buy into the dip on SOUN. Please do not copy me. This is an incredibly risky stock. Just because I trade it doesn't mean that you need to. My trade is not your trade. Okay? Is that understood? Short NVIDIA, I dare you. I was going to short NVIDIA today during, we had a joke with an LPP. One of our people bought it at 125, 126, or I guess bought it at 121, but it was trading at 125. And I was going to short it then, but yeah, it's oversold enough. But it's a strong descending pattern right now. So no break of pattern, no reversal. It's not indicating signs of an uptrend. So I don't know who you're trying to dare. The 1,000 shares that you own of NVIDIA, if you even own 1,000 shares, can promise you doesn't do anything, right? Did Fed speak? Fed has not spoken yet. Might be the day to stay cash and see what the markets present in the coming days. I like that. I think that we'll see a pretty decent opportunity present itself today. I wanna wait for big moves. Right now, I'm just gonna play with the market. Looks like the market reacted in a negative way. I bought into the dip. I want to see if we get a nice rip up to that moving average and then sell into the highs. That's all. That's all I'm doing here. Okay. Just the chill guy that normally likes to short and eat Chipotle. Bitcoin is popping. Yeah, we must have a different definition of popping because Bitcoin is dropping. Bitcoin does not like it when the Federal Reserve pauses. Doesn't surprise me. There is a guy on Instagram that I tried to get. I'll probably make a video about it later within this week. But this guy that said that he would bet me $10,000 that Bitcoin will never hit 92,000, will never go below 92,000 again. I sent him a legal binding agreement of, hey, put your money where your mouth is. He agreed that he was going to sign it. And then he said, wait. Let me see if the Federal Reserve cuts interest rates. It just shows me how uneducated he is. And he says he's an analyst. I don't know what company he's an analyst for, but they need to fire him because the market consensus was incredibly clear that the Federal Reserve was not going to be cutting interest rates. And it came in just as expected, no interest rate cut. So it's kind of like common sense. But now he doesn't want to do the bet. He would refuse to sign the agreement. And again, doesn't want to put his money where his mouth is. So here I am. I'm just a chill guy. I'm just a chill guy that is pretty certain that Bitcoin will definitely break below 92,000. I think that's kind of common sense, don't you think? But we'll see. If anyone wants to take that bet, hit my line. 87K Bitcoin will never go back to again. Dylan, if you want to make the bet, whatever dollar amount you want, promise you. Happy to do it. Here it goes, showing signs of a support. Let's see if NASDAQ market begins to recover. NASDAQ market testing support. Let's see if we begin to show signs of a reversal. Here we go. All right. Let's see if it begins to rip. Let's see if the bulls come out to play. I have my bull mask on right now, disguised as a bull, naturally a bear. Bitcoin will be worth a jar of farts. Bitcoin won't go back to 92K by what time? End of 2025. We are in recovery mode. Yeah, let's see if we do it. Let's see if NASDAQ recovers. I'd love to see it. Let's see if we can break above this moving average. NASDAQ, all it's been doing the entire trading session today, lower highs and lower lows. We'll see if that sentiment changes by the time Jerome Powell begins to speak. I would love to see a nice little rip up. But there's nothing. It's been slow progress on the downside. Even a lot of our bears that are shorting the market are kind of like, hey, this isn't even really worth it. It's moving too slow. Not much continuous progress. It's a nice rip down and then it quickly recovers. Nice rip down and then it quickly recovers. So it's not as fun. You have to be very calculated with those entries and exits. So we'll see. We'll see what presents itself today. No MSTR today? Nope, not right now. No open position on MSTR. So, hey, look, maybe I'll be an MSTR investor today and I'll buy into the dip. Fed rates and earnings on the same day is crazy. It just happens to fall on the same date. But normally they have these interest rate or Fed rate decisions, on Wednesdays or Thursdays and stuff like that. So it's not far off. All right, SOUN looks incredibly weak. So I'm not a fan of this right now. How are you guys feeling about the market today? You guys are shorting. I got calls. You think the market's going to go up? Okay. Red, so far so good. I'm shorting it. Nice. Sleepy. It's been boring. Yeah, I do agree. Hopefully that when Jerome Powell begins to speak, it could be a little bit more interesting, right? Yeah. So again, if you guys want me to go live and stay live, Jerome Powell in the next 20 minutes will be answering analyst questions. Let me pull it up real quick. All I ask you to do is make sure you're subscribed to the channel and make sure you give this video a thumbs up. Hopefully that's not too much to ask. NASDAQ market looking weak. MSTR looking weak but oversold, approaching previous support range. No break of pattern, so as of right now, it's still a support. Tesla looking bearish, lower highs, lower lows. I hope to see Tesla today completely break its support. It's been incredibly overhyped up, overinflated, and I hope that its earnings today exposes that it's not even worth $1 trillion. I hope that there's a nice retracement when it comes down to it. So excited for that. Tesla's way overvalued within a short period of time just because he was part of the Trump administration, which again, doesn't change anything fundamental about Tesla itself. You guys know that I'm a big Elon fanboy for sure, but I don't let my personal beliefs cloud my way of thinking of how a stock is trading, or if a stock is, you know, oh, this thing has to succeed because my boy Elon is a part of it. No, it's have some common sense, right? Understand overbought, oversold levels, understand when things are inflated, when something pushes up 120% within just a few 45 days, I think it was. You have to kind of ask your question, hey, this might be, you know, a little on the overextended side. Just like SOUN was, right? From overall highs of $25, that quick rip up, it's not rocket science. Comes crashing right back down. Same thing with MSTR. If you look at MSTR's history, it has a history of pumping and dumping. Just like the last Bitcoin rally, right? Went from $9 per share to highs of 131. Imagine buying here, 90. Oh, look, it's going to keep going. Bitcoin comes crashing down. So does MSTR. Goes back down to $15 per share. Bitcoin rally begins again. So does MSTR. If Bitcoin begins to crash, so will MSTR, right? Not rocket science. It's common sense. All right. MSTR with a nice rip down. How are all my bag holders doing with it today? Let me get a whoop whoop. Where are all my MSTR bag holders at? Whoop whoop. You guys were super loud when it was at $400 per share. Where are you guys at now? Whoop whoop. No? I thought you said hodl, right? We're never selling MSTR. Oh, we know. I love losing 20% in 5 days, right? For all MSTR bag holders. You guys make it too easy to short this stock. Too easy. But SOUN is my main focus today. Talk about DJT. We talked about it. If you guys tuned on into our live trading session for the LPP team, we definitely talked about it when it ripped up and we saw some pullback potential, but I also thought that it was relevant enough that, you know, I like to respect when a pump is pumping. So if kind of like during that whole roaring kitty BS of GameStop, when that thing's pumping up, I'm not going to trade against that pump and that momentum, right? If the news is relevant, if the pump is active, but once it comes dying down and begins to fade, you know, that's when I choose to strike. I like to let things settle and then, you know, I'm there to present myself. So excited for it. Why is all the movement happening during pre and post market? Dude, I know. I'm not a fan of it either. It's unfortunate, but obviously big investors, I'm sure institutions are either aggressively selling or aggressively buying. And, you know, they're doing that often during non-trading hours. So there's nothing we can do about that. It's we have this saying within our LPP group all the time. It's just because the market is bearish pre-market doesn't mean that it has to continue to be bearish during normal trading hours. Today it was, right? Which is very nice to see that there's some form of consistency. It makes it easier to trade when there's a consistent setup. But how many times, and again, I'll use myself as an example, how many times have we gotten burned by, hey, market selling off pre-market, I'm going to open up short. And then all of a sudden, boom, it just skyrockets right at market open. It happens. It's just, that's why we talk about, hey, let's give the market the time that it needs to paint its picture for the day, right? Give the market some time to kind of identify, hey, is it going to consolidate? Is it going to sell off? Is it going to begin to recover? Give it some time. So that's always a good suggestion for a lot of beginners that are just getting started, is kind of like, give the market 30 minutes, maybe an hour from when it opens, especially if you're a complete beginner. There's no reason to rush into anything. Talk about what you think that will happen during Powell's talk. You want me to be honest? You want me to be honest about what I think? He never really says much. And I like it. I like that he doesn't say much, because he knows his role, and he knows that if he says anything or he says too much, it will move these money markets. In my opinion, his word is more influential to these money markets than our previous administration. Trump's a little bit more of a wild card when he speaks and says things, because he does move markets and he generally doesn't care. But Biden wouldn't really often speak about the stock market. And when he would, it wouldn't really affect it because it wasn't a big focus for him. Jerome Powell, when he says something, it moves markets. Like there's that meme of like him saying good afternoon, and then markets either skyrocket or crash, right? I think it's an important thing to, I think it's just good for beginners to pay attention to these Fed meetings. I don't think that you need to trade them. I don't think that they're best for beginners. I like doing it because I get to do it with all of you guys. I get to watch the market with all of you guys. It's a very volatile time, and I do like to kind of mess around during that, with that kind of volatility, but it's not designed for beginners. All right. Well, I appreciate those that have subscribed to the channel and that have given this video a thumbs up. Jerome Powell should be live in the next 13 minutes. So again, if it's not too much to ask, make sure you drop a thumbs up, subscribe to the channel, and we will be watching him pretty much answer analyst questions. So we have 12 more minutes. I just thumbs upped it. Thank you. Ricky, have you taken time to educate yourself about Bitcoin, or do you not care about it? I don't care about it at 100,000 per coin. If you want to invest in it, be my guest. I'm not here to tell you what you should or should not do. The times that I've ever purchased Bitcoin are when it crashes. When everyone else is selling and they give up hope on Bitcoin, that's when I like to buy. When all of these idiots are buying at 100,000, 105,000, I do not care for it at all. Again, if you want to buy it because you think it's going to go to 150,000, you do you. You don't need to convince me. You will not convince me to buy. There's no reason for me to try to convince you. I do not care what you do with your money. I do not care, right? Especially in the crypto market. On my channel, I don't necessarily cover that. The only reason I cover crypto or Bitcoin is because the influence that it has to MSTR. That's all. That's the only reason I care about it. But Bitcoin is notorious for one thing, and that's because it pumps and it dumps. That's one thing that's certain. Every single time it crashes at least 70%. And that's what I'm looking forward to. When it begins to crash and when it begins to fall apart, I'm going to be here to pick up what is left, and I'm excited for it. Some people get mad about that. You guys all have the same ability that I do, right? You can continue to hold, or you can, and if you hold and Bitcoin does skyrocket, then you earn all the benefit, right? You get the reward. Good for you. Again, there's so many different ways on how to approach this market. Everyone thinks, oh, well, you have to do it like I do, or I have to, do I need to agree with you? No, I don't care if you agree with me, brother. We're adults. We're individuals. Do you know what that means? I do not care. The reason I make so many videos about it is because it's so easy to troll. I've made videos about GameStop and I talked about the risk behind it, but I never really trolled AMC or GME bag holders. Not as much as I have with MSTR. I am having too much fun with it because it's too easy. It is genuinely too easy. Back then, I kind of cared about, well, I want these people to like me, all that stuff. Dude, I do not give two shits about these bag holders. Not one. They're all Reddit traders. They're all bag holders. They're going to lose all of their money, and they're not going to be here in the next year because it's just a cycle. It's a cycle of idiots that come and think that they're going to make quick money because they feel like they deserve everything, and they will get nothing. Because their inability to know when to take profits, to identify risk to reward ratios, and to know when to get out. A lot of them are up a crazy amount, 100, 200, maybe even 400%, and they still don't take profits. But again, some people have to learn from their own experience. So I love it. I love to troll them. They make it too easy. And my LPP team, most of my LPP team really does enjoy it. Some people have voiced how offended they've been, and I would assume it's because they're also bag holding MSTR, right? Because no one gets offended just for the sake of getting offended. And if you are, then you're probably just a liberal. I'm just joking. Just joking. Hey, that was a dad joke. I'm a dad now, so I can say it. I'm joking. Okay, don't send me an email about Ricky. I'm triggered. I'm joking. It's just a joke. I don't care that you're a liberal. I don't care what you call yourself, right? We're all here for the same reason, right? You're not watching me because you like the way that I look. You're not watching me because I'm funny, although you know I'm hilarious. You're watching me because we're all here to make money. And that's what I hope to work towards every day. So you can call yourself a unicorn for all I care. I just hope that you work towards being a rich unicorn. Right? Be so rich you can buy your own island and call yourself whatever you want. No one can tell you anything then. Ricky about to get flagged, dude. I know, it's all good. What are you gonna do, cancel me? All right, we have 7 minutes left for Jerome Powell to go live and start answering questions, okay? I have the video ready here, so let's see if they play that music. Yeah. It's better than my background music, huh? I'm gonna turn it down a bit if that's okay. I have it here. So we're ready. I'm just gonna be waiting for the markets to see what we're doing here. Are we gonna continue to push up towards the moving average where we've been getting rejected, or are we gonna get rejected here, form a lower high, and continue to sell off? We'll see. Just made my day. Been watching you for years. Appreciate it, brother. Thank you. Thank you for taking time to, tune on into the live. Here it goes. NASDAQ is trying to hold on by Michael Saylor's arm hair. Let's see if it's strong enough to hold. Ricky, when are you going to bring the day traded hoodies back? We have them. ShopTechBuds.com. Fourth link in the description down below. Dude, we even give you 20% off your first order. Promo code NEW20. Look at this. Look at this. It's $30. And with your discount, I think it'd be $26. Where else can you get a hoodie? Blue, black, Nancy Pelosi hoodie. You get it for $26. $26. Your entire order. Wall Street hoodie. Wall Street hoodie. You don't want Elon Musk. You don't want Warren Buffett. We got you. ShopTechBuds.com. And use that promo code. It's your entire order. 20% off. You can buy one wall art. You can buy them all. T-shirts, mouse pads. You guys know some of you guys need some mouse pads for those dirty ass desks that you guys have going on. Nvidia up or down? Short Nancy. That is hilarious. I would not bet against Nancy. I'm waiting to see. And first off, we have the rate decision. Then we're gonna have Jerome Powell speak in the next 4 minutes. Then after that, wait, do you guys want me to go live for Tesla and Meta and Microsoft reporting earnings? That's a lot of lives today. I went live for LPP. I uploaded a video. Now we're doing this live. Now I'm gonna do another one. When is that gonna be? Yeah, because we're going to have to close this live, and then I'm going to have to go live at 2 p.m. my time, or 4. Yeah? Well, shiz. Let's see how many of you guys are in here. So we have under 1,000 likes, but yet there's 3,500 of you guys here. What the heck? You guys want me to go live, but can't click a simple button? You guys can't click subscribe or drop a thumbs up? Think I'm gonna do it here just for giggles. Come on, boys. That you guys have my back, and girls. All right. Gave you a dislike for oh shoot. Well, I don't like to cuss during my live streams. We have some young people here. I like to mess around. I sometimes use the word shitty, but other than that, there's no reason for me to cuss. Yeah. Oh my goodness, Jose. You're gonna get yourself in trouble. When's the Ironman? Kyle's putting me on blast. It's supposed to be on April 5th when I do my first Ironman. Yeah. It's an Ironman 70.3. So I guess it's a half Ironman, just for those that do not know. Yeah, I'm pumped. Excited. My little skinny ass in the water. Mexicans can't swim. At least I can't. I sink like a rock. All right, 2 more minutes. 2 more minutes. You can run a marathon? Yeah, I ran a marathon. That's actually the first thing I ever did. I never ran before. I trained for about 2 months, and then I ran the Hawaii Marathon. I didn't do too good. I did like 8 minutes and 50 seconds, so much slower than what I wanted to. And then I was like, I'm done running. And then I signed up for a half marathon, and then I did it in 1 hour and 30 minutes and 40 seconds. So I did it at a 6 minute and 54 second pace. And then I just did one last weekend, not this past weekend, but the weekend before then. And I did it in 1 hour, 29 minutes and 50 seconds. So 6:52 average. So getting better, getting quicker, a little quicker, but I'd like to be a little quicker than that, you know? Here it goes. Nice retracement. All right, we ready? Let's do it. Friendly reminder, again, very similar to these live streams. I host a private live every morning for about 30 minutes to an hour. It's how I start my mornings every morning. Again, if you're just getting into trading and you want the ability to watch me trade live every morning, it's the second link in the description down below. If you feel like you're ready to join my LPP team, it's a one-time payment, lifetime access, and you get access to everything. So let's see how this plays out for Jerome Powell and the NASDAQ market. You guys ready? So I hope that you guys enjoy. Thank you for tuning on in. Don't forget to subscribe, and I'm going to shut up now. Maybe we should have a split screen, right? Big JP.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall.
NASDAQ market pushing up.
Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Watch for a break of support.
I look forward to your questions.
This is where he begins to answer analyst questions.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
No influence.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Yes, sir.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
There we go. There we go. There we go.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of higher rates on interest-sensitive spending, for example, in
Let's
housing,
see if it holds.
and if you look at the
Last time we got rejected and rejected.
we're seeing
just a heads
the economy
up.
move toward 2% inflation and has moved largely to maximum employment. So we really look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation.
There we go.
Alternatively, some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals.
NASDAQ market dropping,
we want
getting rejected at moving average.
Policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months.
NASDAQ
Conditions seem to be broadly in
Come on,
balance.
new highs, new highs.
So you
Let's
look
see
at
it.
the last couple of inflation readings,
Come on,
and you
buddy.
see we don't
Good
overreact to two
boy.
good readings or two bad readings, but nonetheless, the last couple of readings have suggested, more positive.
There we
readings.
go.
So I think policy is well positioned.
Lock in those profits. Lock in those profits.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No, so let me look. If you just look at the first paragraph, we did a
There
little
we
bit of
go.
language cleanup there. We took out
Golly,
a
man.
reference to since earlier in the year as it
I
related
love
to the
it.
labor market.
I love
And
it. Push.
We just chose to
Push.
shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two.
Let's
two
go.
good readings in a row
Let's
that are consistent with
go.
2% inflation. Again, we're not going to
Special teams,
overinterpret too
special
good
players,
or too bad readings.
special
but
traders,
This was not
lock
meant to
and
send a
profits.
signal. Other
There
than
we
this,
go.
You know, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit.
Closing
at
out
the
my
short end,
entire
but
law
not the
on
longer end, which is what
SOUI.
really matters.
I'm
And those
closing
could
it
be
early.
Could be related to what you
Just
mentioned.
because
some
I
of the
do
new
doesn't mean that you
policies.
need to. I often close
The
early.
committee is very much in the mode
Here we go.
of waiting to see
Holy
what policies
smokes,
are
it's
enacted.
pushing.
We don't
love
know
it.
what will happen.
How much
with,
are we
with
up today?
tariffs, with immigration,
Bingo!
with fiscal policy, and with regulatory policy.
Closed
We're
out
really
the
just
position.
beginning to see, and actually are not really
God
beginning to
is
see much.
good.
And I think we need to let those policies be articulated. Before
I don't
we
ever
can
want to
begin
hear,
to make
Ricky, all you do is
plausible assessment
short.
of what their
All you
implications for
do
the
is
economy will be.
short.
So
How about you
we're gonna
try
be
going
watching
long?
carefully, and as we
Boy,
always do,
I
this is
follow
no
the
different than
money.
any other set of
If it
policy
makes
changes
money,
at the beginning of an administration.
I'll trade it.
We'll patiently watch and
I'm
understand.
going to close out my
and-
one lucky share because
you know,
I'm going to get ready to
not be in a
open up
hurry
short now.
to
I'll
get
short
to a
it.
place of understanding.
There we
what our
go.
policy
There we
response should
go.
be until we see how it plays out.
Oh,
Michael Mickey.
couldn't even hear him speak.
Michael
Sorry.
McKee from Bloomberg
I
Television
apologize.
and Radio. You and your colleagues normally condition future policy moves with
Keeping
the
it light.
phrase, if the
500
economy
shares
develops
short.
as we anticipate. Is it fair to say that since there's
$7,000.
a lot unknown about what this administration's fiscal policies are actually going to be, that you don't
forget
have
earnings. Yeah,
a
we gotta
medium
stay
to
light.
long-term
We gotta stay
economic
light.
forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So. In the current situation,
13K.
there's probably some elevated
13. Not bad.
uncertainty
hit it.
because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should
I
be
like
passing.
that.
We should go
Almost
through
a
that.
4-to-1
and
ratio.
then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature
Still
of a
pushing.
placeholder.
Let's stay light.
Meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy is in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth.
Oh!
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate?
Market's still pushing up.
Of politics.
NASDAQ's still pushing.
As I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
MSTR pushing,
you said that the Fed is in
342.
wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see they're alternative simulations. So that's what they do. It'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround us. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And
that's a good question.
It's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Playing it safe. It could still push up. So reduce my exposure, reduce my position size. Again, not every trade I take is perfect, so I want to size down.
Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you all know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. But remember, we're not, we're under 2%.
Overbought reversal set up for me.
We do mean
just
to get
looking
back
for
to
progress.
2%.
Let's see if we get it.
And in terms of the labor market, I mean, how is that broadly? You said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, now you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those two things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make jobs for workers declines as well.
Yep.
So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
It's calculated.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between
NASDAQ
the
market
of the
curling
NGFS
over.
And our mandate.
Get ready.
Other central banks have different mandates.
Let's see if we get it.
NGFS, we have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Said stay in your lane, buddy.
Thanks, Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve.
What a lame question.
We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there? So
it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
There's not enough shares to short this stock.
Claire.
Hard to borrow. Too many people shorting it.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry,
what sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases. And so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess.
Watch for the retracement.
18. Yeah, we didn't really know.
I have an active short on MSTR.
The range
I just have 200 shares.
Very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries.
Another 50.
We don't know about retaliation.
There's
we don't
enough
know
shares
how
here
it's
to
going
short.
to transmit through the economy.
You guys took all of my shares on
consumers.
SOUN. It doesn't let me
remain
short
to be seen.
anymore.
There are lots of places where that.
I know it's you guys.
Where that price
Terrible.
Increase from the tariff can show up.
I told you,
between
don't copy what I'm doing.
The manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney. Thank you, Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting.
Ooh.
And then the second question is just, I wonder if the AI prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
I like both of those questions. QT is quantitative tightening.
Let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively.
So more QT.
In our ample reserves regime.
Watch the market drop.
Monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Watch for the break.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since...
Okay, we are nearly at a 1 hour live stream, and you guys asked me to go live for Tesla, Meta, and Microsoft, who report earnings after the market closes. I'm going to take a break. I'm going to close out this live stream. I wanted to show you guys. Actually, we got asked a pretty good question. Ricky, why do you not show how much you're up or down when you're actively trading? Does anyone want to tell him in the live chat? So you must be new to the channel, and I don't mean this in a disrespectful way. I'm just saying that there's a thing that we call the blind trading challenge. Often, especially myself, and I can only speak for myself, when you're a beginner, when you're taking a trade, you're often looking at how much you're up or how much you're down. The trade itself, the opportunity, doesn't care how much you're up or down. It's all based off of the trade opportunity itself. So we call it the blind trading challenge, to close out how much you're up or down and to solely trade the charts. If it's going your way, focus on that. If it's showing signs of a support, lock in profits. It doesn't matter if I'm at $100 or at $99. The whole point is to take profits when it makes sense, not because it's a pretty figure. Also, when it comes down to cutting losses, to cut losses when there's a break of pattern, or if it makes new highs, whatever the case might be, that, okay, hey, I need to cut losses here because it makes the most sense to close it out. So in my opinion, it clouds my thinking less. I less overwhelm myself with how much am I up, how much am I down, and I focus more on the trade opportunity itself. It's something that we've shared within our LPP group. A lot of beginners have said that it's been huge help for them. And again, it's the way that I like to trade. Just because I do it doesn't mean that you need to, but I like to explain my why. So I hope that that makes sense. So it looks like I went from 13K to 12.3. Nonetheless, again, we originally went long on SOUN. I was shorting it prior to that FOMC, before the FOMC rate decision. And then I decided to go long as it began to show signs of a support. And then now I opened up short as I see signs of a potential retracement. I do plan to close out my trades completely by the end of the day because, again, Meta, Tesla, and Microsoft are all going to be reporting earnings, and I want to have options. I want to see if the markets go up. I want to see if the markets go down. And I don't want to have any open position because, again, any open position is a position that's open to risk. A lot of you guys got to see and get a taste of what it's like to watch me trade live. And like I've said so many times before, again, I trade live every single morning. Just like you saw today, you get to see all of my entries and all of my exits. If it's something that you want to continue to see, then again, that is exactly what my LPP team gets to experience every single day. And it's a one-time payment, lifetime access. Do you need it? No. If you want access to it, again, it's the second link in the description down below. We do have a discount code there for you. And if you sign up, it will give you $200 off. It's a one-time payment, lifetime access, and the cost breakdown breaks down to $1.35 per day. So it's a simple question. Is it worth $1.35 per day for you? If it is, great. If it's not, I respect that. Then you can continue to learn on your own. I wish you guys nothing but the best. I hope that earned a thumbs up. If you have any questions, please feel free to stay connected, subscribe to the channel, drop a thumbs up, or feel free to follow me on Instagram, which is also linked in the description down below. I really hope that you guys enjoyed this session. There's a handful of LPP traders here in the live chat that would be more than happy to share their opinion about what it's like to watch me trade live. And hopefully we can see you at tomorrow's live trading session at Market Open. Meta, Microsoft, and Tesla reporting earnings after the market closes. That's going to be in around 53 minutes. So I plan to be live there. I appreciate you guys tuning on in, and I hope to see you in a few minutes. Like always, let's make sure that we end the year on a green note. Take care, team.